Breakaway Gaps. Guess you got. Well, I assume you don't know about them, but we're going to talk about them today and what they mean, especially in the sense of smart money, because they're kind of important, and I'd like to tell you about them. So hang tight, guys. All right. So, breakaway gaps. And by the way, that the thing I just did with the photo inside the photo and took the photo, I did that on purpose. Anyway, never mind. I was going to explain, but nobody really cares. All right. So, what breakaway gaps are? Well, first, you have to understand smart money, and again, that's what this channel is all about. So above me, I know you can barely even read what it says, but there is a photo of we'll get into the chart. In fact, I probably should even have this chart up here because we're going to get into this chart. So let me go and just take that off of there really quick. But in the sense of smart money, you know what it is that it's people that can control the charts. And I'll admit I've been wrong lately. I've honestly thought we were going to take a deeper dive. Well, not a deeper dive, but at least a little bit more of a retrace before we saw this kind of movement that we've been seeing lately. Higher prices, things like that, which leads me to believe that again, we could see a deeper retrace. Basically, thinking, getting people to think, especially if you're the person that can control this chart, control this asset, control whether it be Bitcoin, Ethereum, Avalanche, Matic, even thing like Axie Infinity, the NFT coins, things like that. There is going to be somebody that is going to control the majority of that because that is their asset. And because that is their asset, they're going to want to protect it, right? So because they're going to want to protect it, they basically kind of do this thing to where they kind of, pseudo control it and almost leave you believing that you guys have the majority of the in that this thing can't be controlled, and that the bears are trying to do this and the bulls are trying to do that, and it's all a facade, guys. It's all a facade. Okay, just to let you know. But like I said, I will admit that I was wrong lately on some of these things, just because I was trying to put myself in the position of, hey, if I was somebody that was trying to control this chart, what would I do, right? And I thought they would push it up and eventually start bringing it back down because people would start buying into it, and then get everybody to start buying back down and then push it up again, and make a takeoff. And instead of pulling it back down again, it just kept going up. So a lot of people got lucky. And then I would say this week, especially if you're going long, I know I had quite a few calls or signals that I posted on Core, and if you don't follow me on Core, please do. I have made over 96% profit this week on Core, and I think I'm number 8 on there. As far as total profits, I'm at 168%. So if you want to get some good signals you might want to check into that. Follow me. I'll leave the link in the description, because it's a good app. It really is. It's a good app to follow people for good traders. If you're a good trader, then and you don't know really what you're doing, and all you're looking for is signals, it'll give you some good traders to follow. I don't like to brag, but I'm number 8. Just saying. But if, going off the topic of smart money, I'm not for sure if that's what these people, or these other people, are going off of. And so if you want to try to get your head out of this trading or this retail trading category and into a smart money category, you want to continue learning about that stuff, I would suggest you actually subscribe my videos, because I'll teach you little bits here and there. Like today we're going to talk about breakaway gaps, and that's something that a lot of people really don't know about. So without more blabbering, let's just go ahead and get into it. So here I have, I think is AVAX. Yes, so this is Avalanche. Now this one has a smaller breakaway gap than most. And what I mean by breakaway gap, okay, so there's actually 2 gaps in here, and they're both daily, right? So a fair value gap, you have to understand what a fair value gap is. Fair value gap is an imbalance in the chart, right? And it is where it's actually 3 consecutive candles, right? So let me post a little ellipse around one of them. So that would be right around here, right? That would be your 3 consecutive candles. You got 1, 2, 3, right? And in between you have this one standalone candle, and if the wicks do not touch, that means it did not rebalance. So if it did not rebalance, then that is considered a fair value gap, right? Now what a breakaway gap is when the price does not come back to that gap and it kind of runs away. That is what is considered a breakaway gap. So what do your breakaway gaps tell me? It means that there is still an imbalance in the chart that it does want to come back and fill. Now, if we were to take a look at this right now I do have the chart set to, well, it shouldn't be here. It should be more like up here. Okay, so right now we do have the chart set to, if we're at the very bottom, almost at the very bottom. Let me redo this again. And we go to the very top as this being one wavelength. Whenever it does pull back, right, it does pull back into what we call the smart money buy. The smart money buy being below the 61.8%, down to about the 88.6%. It can get lower than that, and that's why I was thinking it was going to pull down to this 4-hour fair value gap. Because if you go to the 4-hour, there is one of these gaps like this in here, and it's kind of like a breakaway 4-hour fair value gap. Is it possible to still get down there? Yes, very, very possible. Seeing this kind of movement, especially on the daily chart, and I'm looking at Avalanche, we'll go through a couple others, seeing movement like this, you got like a week straight of just complete upwards movement, all the way up until I think it was like Saturday, and maybe, let's see here, what is today? They would be considered Wednesday, or Thursday, Wednesday, Tuesday, Monday, Sunday, Saturday. Okay, yeah, this makes complete sense. So this movement all the way up throughout the entire week, and then it gets to the top, and then once it gets towards the end of the week, it starts to pull back, right? So if we look at the weekly, this is what I was talking about last time about my weekly weekly profiles, right? So what you have in a weekly profile is you'll have a candle that will be a very large candle, and then your next candle will be one that will come back and generally a touch of a bullish order block, something like that. But here in AVAX, what we have is you have a lot of these candles, especially weekly, jumping up into this bearish order block, which is interesting, which tells me that it has been trying to fight through this bearish order block for a very long time. So to me, it wouldn't be surprising to see, especially on this week, it actually break through this bearish order block, come up, and then hit these fair value gaps. So, and on this weekly, you may have a small weekly fair value gap, but not a huge one. Now, there was a weekly fair value gap whenever this thing dropped big time right there. But as you can see, we've already went through it, pulled back down, and then went through it again. So the weekly fair value gap, that imbalance has already been filled. Now inside that imbalance, there is a daily fair value gap sitting right here that I think we still need to pay attention to. Now, even though, especially on AVAX, we've come up, we haven't exactly, we've broken structure on a couple different things, we've broken structure lightly on, maybe the 4-hour chart and the 1-hour chart. So that tells me that we are looking more bullish, right? So if you look at this, if we go to the 4-hour chart, and this is a previous fair value gap, daily fair value gap, you can see that here we came up, it probably hit a bearish order block, got pushed back down. Now we come up here, it's coming back up to the bearish order block, it boom, hits it, gets pushed back. Here is a 4-hour. I didn't mean to move that. That's one thing I hate about these charts. You want to grab something and move it, and you can't, because it wants to grab something that's not even there. Okay. Pulls back down to the 4-hour fair value gap, comes back up, hits the bearish order block again, pulls back down to the 4-hour fair value gap, hasn't filled it yet still, but still it's pushing back up. Now we're getting to the bottom of this daily, old daily order block, and this is what I'm talking about this breakaway gap, because you can see that whenever it came up and got pushed back down and then took off, the one thing I attribute that to would be the breaker, right? So there is a breaker right here. So that is your last candle up before a low, high, lower, low formation. So if you pull that across, and let's try to make this a little bit different color so it doesn't look like we're doing the same thing as there we go, let's make it red. Okay, and then I'll also type in breaker. So you have this low, high, lower, low formation that forms, and I'll see if I can't do a path here. So you got low, I need to change that color to high to lower low, and I'm just gonna make that neutral color. All right, so you have a low, high, lower, low formation. So the last candle up would be considered your breaker. So coming up to that candle, generally one or two things happen, right? It either gets rejected and gets pulled back and tries to make a lower low, or it'll run through it, and then once it runs through it, then that becomes your support. So this is actually your support, not something where there's like two equal lows or something like that. No, that's liquidity. I don't know what liquidity is, or whatever I typed right there, but that is liquidity, and there is quite a bit of sell side liquidity right here. And this is what also still scares me is that I know we've done this thing where it's taken off, and people are thinking that this is a very, very bullish moment, but again, we have this breakaway daily fair value gap, which means that there is still imbalance in this chart now with this breaker. it could mean that it could come back. Now, it could come back and just fill the breaker, which would also fill the daily fair value gap, and then continue on, and that would be it. So we could see something like this, and then continue on. Or we could see the opposite. We could just see it continue on upwards, but I'm leaning more towards this. And because of that breakaway gap. Now, the whole sell side liquidity thing, this may come at a later date. This may come at a time that, see, we're getting at the time to where if we look at daily or weekly consensus of what is going on, it's getting to about the time to where we're looking at a big swing, right? So generally about, what you're supposed to do is you're supposed to do, a 30, 60, 90 day look back, right? So if we were to do 30 days back, 60 days back, 90 days back, guess what? 90 days back is probably where the biggest swing is. So that is why we're in a time to where I think we're probably looking at a big swing coming up soon. That doesn't mean it's not going to go ahead and just thrust forward. I still think it could come back and hit this, daily fair value gap. That is the breakaway gap, and then push up. But then once we get that other 90 days ahead of that, we're going to see another swing again, probably back down. And that's where I think this sell side liquidity in this lower area is going to come into play. Why? Because it could still come in and hit this 4-hour fair value gap, and then hit the bottom of it, and then continue on upwards, and we're still in a bullish chart. We would still be considered bullish because we did not close below any kind of low, right? So that's one thing you have to be careful of. You always have to be thinking about what kind of chart you are in. And with Avalanche, we're still in a bullish chart. Now let's take a look at Algo. Algo is kind of the same way. I was wrong on Algo too. I thought we were going to see this thing have a pretty big pullback, and maybe down to like the 50-cent mark, and we still may. We still may. But as of right now, what's happening is, and I marked it, probably to get in a lot closer what's going on here. I said this is probably what most retail traders would do. Well, if this is what you did, congratulations, because you made a pretty hefty amount on that reward. That's almost a 3-to-1 reward. I did not short this either, because I was waiting to see what was going to happen, to see if it was going to, because once it got into this, up into this area, I did see it starting to pull back, and I was like, okay, this thing might start pulling back into that territory that I was thinking of, around that 50 cents. But what did it do? It didn't pull back that far, and instead it created that daily fair value gap that was a breakaway gap, right? So this again tells me that we could be seeing something larger. And if I want to, let me see, reverse this, right? Currently it is above the 50% mark of the full, I would actually have to move this over here, of the full wave, and it would need to be below the 61%. So where do I think Algo is possibly going? Well, let's see. Where would this go? Right there. It could possibly get there, maybe a little bit higher. Now, where exactly does that lead us? Look left from where my pointer is. The daily bearish order block. It's exactly where it leads us, the body of the daily bearish order block. So instead of using the trend line, I'm going to use the horizontal ray. So if we use that, and I'm going to style this so it would be another red. There we go. Oh no, not black. Come on. What are you doing here? Okay. Because right here, there's also a daily bearish order block that it has hit, but it's also around an equal high. So you can tell it looks like it's already been trying to, it's already thrust itself into this once. So usually once it tries again, that's when it'll have success. All right. But as you can see, there is also a daily fair value gap that was a breakaway gap on the way down, right? So here we have a daily fair value gap that was on its way down. I can definitely see it coming into this area. Probably here is where you would see a little bit of consolidation, maybe a little bit of pullback into this, especially since it's creating another breakaway gap. If it's going to close out today, above here, could possibly pull back into that one, move up until it hits the current, bearish order block area, which is going to be right around here, daily bearish order block, and then pull back into this, the breakaway gap that is currently here. This seems to make more sense to me than what I was currently thinking, because now it's giving people an excuse to start thinking. At first it was like, well, it's making some moves, so maybe I'll buy in, but now it's starting to make very large moves, in larger moves than what I think we expected, or I expected anyway. And so because of that, you're getting people with the mentality of, oh God, it's making these moves, it's about to break out. Let me jump in now before it does. You're getting those type of moves. You're getting the dailies closing above, these swing highs and things like that. So what I think we're going to possibly see, especially something like this, come in here, maybe consolidate a little bit, it maybe pull back down into the top of this, fair value gap. If it creates one, we'll create a fair value gap. I don't think today it's going to come all the way back down to 83 cents or anything like that on algo, and then push itself up all the way to the daily bearish order block. And then at that point, I think we will see it come all the way back down to the daily fair value gap that is the breakaway gap, because that's when you're going to get a lot of the people going, catch this, especially whenever it does this run here. A lot of people are buying in already, and they're buying in already. It's probably going to go up a little bit higher. They're going to start buying in. It's going to drop off. They may get some people that'll sell off, but they're also going to get more people that are going to buy in because they think that this is a very, very bullish chart. Boom, it takes off. They get a ton of people to buy in, and as soon as they do, what does it do? Boom, it drops. And it drops heavily, and then that's when you get the panic sells. That is when you get the panic sells, is when it gets all the way back down to this area, and your people are going, oh no, it's going back to the same support level, right? That support level that we talked about. Everybody's thinking it's going to go back down to the same support level, so they start selling off, right? So that's what we could see, and it could. There's two things it could do. It could come out to this breakaway gap. I think that's number one. Number two, it could come back down to this 50 cents. I don't think this is an area that it's going to come to and stop and then come back up again. That would just be dumb. Smart money would not do that, because there would be so many people expecting it that way too many people would make money off of that trade, and they know that. So instead of actually pulling it back down to that same exact level, they'd pull it back even further, way further. But I think we're still, like I said, we're starting to get into that 90-day look back that I was talking about, being that point to where we need to start seeing that big swing again. So let me see here. Let me see if I can. See, we are currently somewhere at around 200 and something days. Let's see here, about 120 days is when we had the huge spike. But here, almost 90 days ago, you can see we had this big swing high. So we're about due for another one of these. So generally every about 30 to 60, 90 days, you will see one of these huge swings, right? So we are due for one. We are definitely due for one, and we're due for one in almost all these charts. And another one I was going to take a look at was going to be Ethereum, because Ethereum has one of these too. And I have a ton of notes on Ethereum, so bear with me here, because I'm gonna have to get deep down in here to show you where the breakaway gap is in here. There it is right there. This one happened a little bit longer ago. So this one happened mid-March, or March 16th, the day before St. Patrick's Day. It happened then, right? But it's getting up into those areas. Again, here you have a swing high. It's getting up into there, right? And again, previous, for our fair value gaps, previous imbalances, this thing could be going. And also we have what is called a redeliver rebalance here right now. So as long as this closes up, right? As long as this candle closes up, this area right here would be considered a redeliver rebalance. And why is that considered a redeliver rebalance? Well, because this wick went above this daily candle, and this candle wick did not go above it. So technically, this is an imbalance, right? It's almost as if this wick doesn't exist, right? So there's an imbalance in there as well. So there's two imbalances that we do have here in the Ethereum chart. And if, we were to take a Fibonacci, right, and let's go toward the bottom. Why did it just do that? I don't know, but let's go with a Fib retracement and go to the bottom here. Oh, I've got it on reverse. So I want to go to the very top of this previous imbalance. But first, let me take it off reverse. There we go. So if we were to go to the top of the previous imbalance, yeah, I have it listed as imbalance. I think it was a weekly imbalance here. That's what it was. Even though it looks like it came down in, pulled back up, went back down. I think I'm almost positive that was a weekly imbalance. Let me take a look at the week just to be sure. Yeah, maybe not. But it does look like there is a weekly imbalance in between the two imbalances that I have listed. So let me make another imbalance. The red one here. All right. And that way we know this one is weekly. Weekly imbalance, fair value gap. So I'm going to go back to the daily. And let me see here. If it was to get up in, what it could do is it could just come up and touch that weekly imbalance, which is basically at the top of where I was previously. Now, if it does that, where, the redeliver rebalance is just right around at the 50% mark. The bottom of it is at the 50% mark. So it wouldn't be surprising, right, for smart money to take this thing and push it up, get more people excited about, where it's going, getting into this imbalance, getting it about equal. You see, I don't know if you can see to the left, we have equal highs right here and right here, 2 equal highs. I would think it would come up to those equal highs, right? And then maybe do a little pullback, maybe not too much, but this is where people would maybe start trying to short it, and then it rush up and then hit the entrance of that weekly imbalance, and then that's when you would see the fall back down into redeliver rebalance, and then that would break it underneath some kind of breaker possibly, to where you would have a low high lower low scenario. So then once it comes back up, it could hit the bottom of that low of that breaker, falling back into that daily fair value gap, or breakaway gap, as I've been talking about. And then once you do that, then you could see it finally take off. And it's these breakaway gaps that are making me think that they're gonna push this thing up even higher, getting people to buy in even further, because we're getting to a higher point than what we have been, especially in Ethereum and all these charts. We're so used to seeing it down in like the 2000s and stuff like that. Once we start getting it, like right now it's at 3100, people don't want to be left behind. People want to buy now before it gets up to 4000, right? So I think that's what's going to happen, is that people are going to start buying in a lot higher, and then the people that control the asset are going to go, okay, flip the switch, boom. And then once they flip the switch, it goes back down. It goes to this imbalance that it wants to fill, and then it's also in that imbalance that it wants to fill that is definitely in a smart money buy area, right? So that's where it wants to go. And after that, it would take off. There's a plenty of these all over the charts. I mean, Matic has one. They're everywhere. You just got to look for them and check them out yourself. If it doesn't happen, it doesn't happen. But generally, in the world of smart money, right, I know I was wrong before, about the algo and it possibly retracing back further, but I didn't expect it to be pushing up as high as it did. But now that it's pushing up as high as it is, this makes way more sense for it to pull back even further. If that makes sense. Does that make sense? I hope it does. Okay. So again, if this is the kind of thing that got you to think a little bit more outside the box, got you to question what's actually happening in these charts, got you to think a little bit more of a technical analysis standpoint, please subscribe this video, check out my link on Core. That's where I put my signals. Check out my locals, which is bodiesxwix.locals.com. I put all my signals out there, and then afterwards I brag about it on Twitter. I'm like, hey, see, if you would have followed me, you'd be making this much money right now. So that's just where I'm coming from. Hopefully you enjoyed this video. Hopefully this made sense to you. Thanks for watching, and always wear your pants.